Hi, everyone, and welcome. Thanks for joining. We have a great topic for today's webinar. We'll discuss some insights and actionable trends, along with some recommendations for finance teams in 2025. Maybe before we start, just some housekeeping. So this webinar will be recorded, and we'll send out the recording afterwards. And feel free to ask questions in the chat. We'll do our best to address as many questions as we can throughout. And that's it. Without further ado, let me introduce our panelists. So first we have Hanan Aharoni. Hanan is the CFO of Operative. It's a global PE-backed company that delivers software management solutions to the world's top media companies. And Operative Solutions are processing more than $60 billion in annual advertising revenue. So welcome, Hanan, and thanks for joining.
Thanks for having me.
And we also have Roy Helstein. Roy is currently the CFO and COO of Teammate. Teammate is a multi-fund investment firm. They do everything from incubating startups to backing a growing company from early stage to growth. And they have quite an extensive value-add arm to them. So it's a pretty big operation in and of itself. And Roy also has experience as a VP of finance at Checkpoint, which is a global publicly traded cyber company. So we have many hats here in the discussion, from PE to PE-owned to public companies to investors. So thanks, Roy, also for joining.
Thank you, Noam.
I'm Noam Mills. I'm the CEO of Panax. We're an AI-driven cash management platform for lean teams with complex treasury needs. So great. So let's start. We have a packed discussion. Maybe to kick things off, as we transition from 2024 to 2025, what do you guys see as the main trends that are impacting finance teams around the world? Feel free to answer it both from what is still with us from 2024 and new trends, and of course each of you from your own experience. Roy, maybe start with you.
Yeah, sure. So I think 2025 is definitely going to be a year of fluctuations, of volatility. And that's something that we already saw over the past few weeks with the elections in the US. So I think that from the financial perspective, hopefully we'll keep the trend of back to normal after the burst of the bubble of 2021, 2022. So hopefully we'll see some back to normal. But for sure, interest rates, currency fluctuations, and volatility in general will be one of the big things that we'll see.
Great. Yeah, makes sense. Hanan, from your point of view, leading a finance team in today's world, what are the main trends that you're looking at?
Yeah, so I think there's a few worth mentioning. First, I think change is constant. You don't know what's coming next, but you somehow need to be prepared for it. And I think we saw it with a lot of events like SVB collapse, the war in Ukraine, the war in Israel, that finance team and companies as a whole need to act fast and need to have the data to act fast and react fast. So also diversify, their assets, their cash, and so on. I think another one is, the phrase "cash is king" is probably true more than ever, because companies now need to be much more efficient in how they manage their cash way, extend the runway they have. Companies are required now not just to grow, but also to be profitable while doing it, or at least show a way or a path to profitability. Depends on the maturity of the company. So I think that's another piece. So you need to manage your cash flow efficiently, effectively, and carefully. And I think another piece is AI and overall technologies that are entering the space. So AI, machine learning, that can really optimize the way you work and the jobs to be done. So that's another thing. It can really make an impact on how you operate and makes it much more efficient. So those are the couple of trends, or three trends, I saw, and I think will continue into 25 and even enhance.
Yeah, I think efficiency is a great one. Maybe let's start with that one, right? So when you think about how are finance teams setting up their systems, how are they automating, what are they doing differently to adapt and to become more efficient? Hanan, from a practical point of view, maybe what are you guys doing for efficiency this year?
Yeah, I think first of all, because cash now is expensive, interest rates are high, right? Investors are more selective. You have to really choose the areas you want to invest, and you need to invest that really move the needle. So there's tools that are nice to have, but I think you really need to focus on what really drives or move the needle. And in the past, it was mostly around CRM, ERP, and so on. I think recently, in the current environment, having also a robust cash management system is becoming really key. So first of all, I think you need to identify, the areas, and then you have to make sure all the systems are connected and integrated, so you can really focus on generating insights and not just spend time gathering the data. And I can give you a quick example. I mean, when we grew pretty considerably a few years ago, organically and inorganically through acquisition, we reached a situation we had 10 different accounting systems, 2 CRMs, a lot of bespoke solutions. And it came to the point, we were flying half blind. It took us like months just to understand the data and the past financials. So we really embarked on a digital transformation journey. It took us a couple of years, but we basically implemented or consolidated everything to one ERP, one CRM, a lot of solutions on top of it, KPIs and so on. But every system kind of connected to one another. And it's really transformed the ability of the company to be agile and to really understand the data and have real-time insights. So the level of decision we can take now is, considerably better than what we could have taken a few years ago before we had all those automations, because now we're really focusing on understanding the reasons, the issues, and the solutions rather than just trying to understand the data itself.
Yeah, that's really interesting. You're actually saying, so even before you can drive efficiency, the first step is to get visibility and to have that connectivity in one place before you can then drive more efficient decisions, right?
Yeah.
Roy, do you agree? How are you looking at it?
I fully agree. I think Hanan gave a very good and deep perspective. I may just build upon it and add that in general, I think that the finance role is becoming more and more strategic. If I'm looking where the finance role was 10 years ago versus where it is today, I think it's much more strategic. And this trend will be combined with what technology is bringing into the table. And what I mean by that is that once you capture the data right, and you set up the right KPIs and the right measurements, and I think that should be the finance role, I think this is where the CFO or the financial position takes a much more significant role in the strategy and the direction of the company. And I think this is something that you have to build upon the execution and the technical aspects that Hanan touched about.
Yeah, that's definitely that makes sense a lot. So it's hard to talk about efficiency without talking about AI. So we all feel the impact of AI, whether it's in our personal lives or in different functions in the organizations. How are you thinking about how AI can help finance teams, whether it's for efficiency or other reasons this year? Roy, I think you have to say about that.
That's a great question because it's something that can go so many ways. Look, AI is definitely one of the biggest game changers in the history of the world. We all agree about this, but we keep trying to put our finger about where this is going. Now in Team8, that's our job. So what we're trying to do, we're trying to imagine the future, 5 to 10 years out, make some thesis and find the products and then the companies that will match into these theses. So from what we see at this point, and I hope that I won't say anything that will make people sad, but basically we are in a very preliminary position of AI. Right now, AI is used mainly to improve internal processes. It improves customer support. And the reason for that is that you have to have a lot higher level of confidence before AI will operate cars or before AI will get into finance in a more profound way than today. But if I'm looking at I'm calling it the chatbot phase that we are in today, I do think that the chatbot era will become an agent era, meaning a co-pilot, if you will. So someone that can really help you make tasks that you give them, not only answer questions or refine emails or summarize reports. That will be the second era. And the third era, which is the holy grail, is having an autonomous finance position that will really, help you out. It will be like a second Noam or a second Hanan or a second Roy, which is a lot less favorable. But anyway, and this second person will actually know how you think, know what is your fiduciary, know what you need to do, know what you can do, and will actually work around the clock doing the things that you supposed to do. And that's something fascinating that we work a lot, and we can elaborate on this in the conversation, but I think this is where AI is going in, like, I would say 3 to 5 years.
Yeah, I think I agree. In today's world and where we are with AI, the fact that basically LLM models still hallucinate about like 5% of the times, it can be good enough for many different functions or for us in our personal lives. But if you tell a CFO, your reports are going to be hallucinogenic 5% of the time, that's a different problem. And I can also say that we see it from our customers, right? We use AI in various parts of our product to automatically categorize transactions, to improve the forecasting accuracy. But we see the kind of distrust that our customers have. So we always try to give it first as a suggestion, and as you said, kind of as a chatbot in a way, as we gain confidence and as the technology matures too. That's also true. By the way, Hanan, yeah.
Just 1 minute, I'll just say, because I can't agree more. When I talk with CFOs, pay attention. When you sign on to Gemini, of the AI of Google, you see that the first sentence that they give you in the subscription agreement is that Gemini can give you offensive and inaccurate information, and you are signing off on this when you sign up for. And that's something that all the CFOs that I know are taking a distance. And I think that solutions like the solution that you described, when you just start with recommendations, start with this first step, you'll be ready to go to jump into the second and third phase when it comes.
Yeah, it's a good disclaimer to have on financial reports before you send them to Hanan, as a CFO, how are you looking at AI tools today?
Yeah, I agree with Roy. I think it's preliminary stage. I think there's a lot of hype around AI, which is good, right? I mean, there's a lot of investment in the space, but also I think it's not completely there yet, especially for finance team. I think every company is trying to incorporate AI into the solution it offers or the product it buys. But I think 2025 will probably become the year that there's clear distinction between what are the use cases and the product that actually makes sense to invest it, because it really optimized the way of working and jobs to be done, versus solutions that are nice to have, but for most companies don't really move the needle and not worth the significant premium that usually comes with AI solutions. And I think we see that with other companies, even Microsoft with Copilot scaling back on the initial offering and pricing, because now companies are trying to understand where the real value is and what the customers are willing to pay for. Because again, as a CFO, you have limited budget. You can't invest in all of it. So while there's nice to have and cool things, right, to invest in, you really need to choose and be selective about what moves the needle. So as a CFO, I know, as a finance leader, I know we have to be in AI. We have to play in the AI world, because in the solutions we offer and in the products we buy, otherwise we'll be left behind. But you really need to be selective. So I think 25 will become the year that AI should and could become much more critical for finance team. But I think there's still a path there, and we'll see the development, I think, as the year goes on and into the future.
And what do you see as the highest ROI, or how do you distinguish between the kind of nice to haves, as you call them, and the critical tasks that you'd like to automate with AI?
Yeah, I mean, eventually, maybe as a CFO, right? It's all either the top line or the bottom line. Like, does it make our operation more efficient in ways? Either it's quicker, right, or it's less cost because I can optimize routine tasks and I don't need as many to do so, or I can move faster, right, and it contributes to the top line. So I think eventually it's the ROI. Like, how do I improve my financials by using AI or have much more visibility into that? Those are eventually, the measures I at least see. because there's a lot of cool things, there's a lot of automation, right? There's a lot of nice to have, but again, there's limited budget, and you have to be really selective on what makes the company more efficient or grow faster.
Yeah, definitely. Now, if we take a step back, from the AI and what's going on right now, and just look at the world. So obviously there's a lot of uncertainty in the global level. More than half of the world's population went through elections in 2024, and all these newly elected leaders are now taking office, as we saw in the US just in the last couple of weeks. So how is this impacting finance teams? How can they prepare for these new changes, these changes and new regimes and geopolitical movements? Hanan, let's start with you, maybe.
Yeah, I mean, it's a very good question. I think I can tell you firsthand that dealing in a global environment is very difficult, right? We, in the company or in the group, we have roughly 25 entities. We have offices in 8 countries. We have customers from, the US, UK, South America, Canada, Israel, India, Australia. So we have inflows and outflows in multiple currencies, which is very difficult to manage in terms of the overall picture. Because on one hand, you need to make sure that your local team can pay taxes and can pay payroll and vendors and so on, and they have the visibility and they can operate on a day-to-day level. But on a group level, you also have, you need to know the picture, you need to know your risk, you need to have liquidity kind of management and covenants compliance, and you need to understand the risk and balances. Do you have natural hedge or not? Do you need to hedge? So that's very complex, just understanding the situation both on the ground and at the group level, and even acting on it. I mean, moving cash between companies is not that easy. I mean, it ties to tax arrangement, distribution agreements, and cost plus and so on. So even if you want to move cash around, you don't necessarily have a good path doing so, or not easily at least. So it's very complex. I mean, I think aside from that, there's a lot of other complexities with global environment, meaning exchange rate fluctuation, like we saw in the recent years, converting currencies, hedging risk or hedging needs, right? So requirements. So it's a complex environment, and acting upon it is complex. And that's why I think you have to be prepared and implement the right tools and processes, invest the time and the budget. And I know it's difficult as the one kind of responsible for budget to spare it. But I think you have to, if it's really critical, and for most companies, cash now is becoming critical because of the high interest rate and cash is expensive and investors are more selective. You have to really invest in the right tools and processes in this area. And you need to think a step ahead. Don't invest in what you're doing now and what, maybe not relevant in a year from now. Invest in the next step. If you're expanding, if you're going global, you need to be prepared for acting in a multinational, multi-currency environment. So I think it's really important planning ahead, and also overall plan ahead. Like, if it's the 13 weeks forecasting, it's a scenario planning. Like, don't just plan for the best scenario. You have to have contingency plan. What happens if things go wrong? Because we saw a lot of things going wrong in the last couple of years. So the planning and implementing the right tools, and just be prepared for how you operate on a group level and how you make sure your local teams can work on the day-to-day on the ground. That's critical for making sure, because otherwise it's very easy to lose control over the operation.
Yeah. So from your point of view, it's all about planning, but also being ready for the different scenarios that we don't know what Trump is going to say tomorrow, and he's going to sanction, right?
Exactly. So I think as long as you have the right infrastructure, you'll be ready for the changes. If you have like the data, you have the systems in place, you have the infrastructure, you can generate the insights and be ready to move quickly and be agile. I think that's most of the solution.
Yeah. One thing that we see with our customers is that before they have the full visibility and the ability to plan and really be on top of things, the way they handle this uncertainty is just to take bigger and bigger cash buffers in different places, be ready for whatever scenario hits them, which makes sense and is logical, and you never want to be caught off guard, but at the same time it's quite inefficient. And I think we mentioned the interest rate environment that we're at today, that is not zero like it was up until a couple of years ago. So I think that's an interesting trade-off that automation can also help companies break that trade-off and have be ready and also be efficient at the same time. So I think that's an interesting point. Roy, how are you thinking about it?
I think Hanan was very thorough. So without repeating anything, I'll just say that, and it's well connected to what we said about fluctuation, about volatility of the market. I think the word that I'll just add is being agile. Agility is key. And I think in order to be agile, you have to set up specific rules to start with. I'll just give an example from the real life, because then I'll take the very, very big and correct insight that you've discussed to my reality. So for instance, the teams that I work with, let's assume that the team is now earning in dollars and have a lot of expenses in Israeli shekel. And then and it can be dollar versus euro, it doesn't matter. But if your budget rate now is, let's say, 3.6 shekels to dollar, and something happens, geopolitics related, whatever. Something happens now in Israel. You gave a great example from last week when Trump just woke up and said, Colombia doesn't want to take my refugees, and I'll just put tariffs on them. And that's how the world is going to look like. That's exactly how the world is going to look like over the next few months, if not more. And when something like this is happening, the fluctuation may be high. So if you put some sort of a stop loss or a rate that says, I know that I'm at 3.6. Once the rate hits 3.7, no matter what, it has to be automatically that I take 1/4 and turn dollars into shekels. And if it turns to 3.75, I don't need to be on the screen. And that's where systems, and that's where agents, and that's where policy and planning, like Hanan said, comes into place. So I'm saying not only be ready for the changes, also set the strategy up front and take advantage of the volatility and things that are happening. It's true for hedging. It's true for interest rate. When something spikes, then you can close some of the money and make sure that it's safe. And it goes along the way for all the things that you do as a CFO.
Yeah, I think that's a great addition. Hanan spoke about scenario planning and being on top of what can happen for in any direction, but the ability to also take advantage of opportunities or be like very fast to react to different risks. I think that's a great addition to the
risk or opportunities. By the way, it can go both ways.
Yeah, as an investor, it's always both, right?
Exactly.
Great. To take things to a more practical level, let's talk about some best practices. So as we prepare for 2025, everyone has a set budget and is ready to roll. What advice do you have to give finance teams going into 2025? Roy, maybe let's start with you.
That's a great question. I think finance teams, hopefully, needs to take a look at themselves as, I said it yesterday, but to provide some sort of a pocket, like in football, to the decision makers, to the CEO in this instance. And the way to do that is, first of all, control the data. Second, make sure that you analyze the data the right way and add value based on the data that you provide. One of the specific examples of how to do that is what usually people call budget planning, and I call always strategic planning. I'm shying away from calling it budget process. It's always strategic planning. And in this planning, when you start with strategy and your budget helps you to make the strategy come true, and part of it for the finance team is to set specific KPIs. Not set 10 KPIs. Don't set one KPI that is subjective. Try to set 2, 3, 4 KPIs for each one of the departments that is totally quantitative, that can be measured and can be measured objectively by the finance department. And once these KPIs are being set and the budget supports meeting those KPIs, then your role, not only your role is not ending when the budget is ready, you actually work throughout the year with the departments in front of the CEO and the board and whoever makes the decisions. You make sure that the money is being spent correctly, and you end up this triangle, if you will, this process in the planning of the year after, because the year after starts with the things that you achieved and you learn from your achievements, as well as the things that you didn't achieve, and you also learn from the things that you want to achieve in the next year. So that's the full cycle of a best practice of the financial department, in my view, that involves the basic, the bread and butter, but also the next stage, if you will, and the adding value perspective.
Yeah, that's great. So defining KPIs that are the right drivers for the goals that the company has set for itself, and also measuring them objectively, to your point, and making sure that they're quantitative. And the only thing I would add is to also measure them on an ongoing basis, right? If you have it, you set the KPI in January and look at it in December, that's maybe you hit it and maybe you don't. That's probably, yeah. So I think that talks to Hanan's point from the beginning, having access to data in as real time as possible so that you can course correct and learn from that data.
I can't agree more, but I will say one thing, Noam. In addition to having an online view, or at least some sort of an online view, you have to have a cadence where someone really cares about what you are presenting, because it's great to have the dashboard, but you also have to make sure that people care about the dashboard, and it makes a difference if the dashboard shows a +10 or a -10. So I can't agree more, and I'm just adding, put a very clear cadence to follow up on it, and valid ways to make sure that people really care about it.
Yeah, great.
Yeah.
Hanan, any practical advice from your side?
Yeah, I mean, I think you covered a lot, but I think finance is becoming, in my view, much more strategic over the last few years, right? And it's a trend that continues, and especially in the current environment, which again, cash is expensive, interest rates high, and investors are expecting company to be profitable, not just grow, or at least show a path for profitability. So I think it's true more than ever, and I think as a finance leader, you have to make sure that you ensure the company has a path for sustainable growth, which is very different from growing at all costs. If 2 years ago that was just grow no matter the cost, no matter what, just show the top line growing. I think now it's much more balanced between, yeah, you have to grow, right? I mean, it's maybe priority number one, but you need to show, for mature companies, you have to be self-funded, especially at a PE-backed environment, you have to be self-funded and profitable. And even for startups or less mature companies, you have to extend the runway you have. So I think it's for finance leaders, it's much more now balancing between the need to grow and the need to extend your runway cash-wise. So I think that's number one. And again, we discussed it, but plan ahead and have the right tools, processes in place, because you don't want to be surprised and come to your board or shareholders saying, I ran out of cash earlier than I thought, or I'm about to break a covenant on a loan, right? It's not a easy discussion or situation, and you should avoid it. So planning ahead, planning not just for the best. And overall, and I think Roy touched on it, controlling the data is super important. Finance team is maybe the only one in the organization that actually has visibility to the data, to the entire data. What are the action and results? And it's see that across like the board, not just financial results, but across, like we talked about KPIs and so on. So you have a lot of visibility into the data, and you have to use it to drive good decision, informed decision, help the CEO, help other leaders in the organization take the right decisions and understand the playground. So I like to basically create accountability and empowerment through data transparency. And what I mean by that is, because finance has all of the data, basically financial, if you're setting up right the system and processes, you should use it, and you should bring your other leaders from the organization to be partners and explain to them why the budget is built like that, why are the constraints, why can't we hire 100 more people, because what are the goals of the company. And I've learned that once you do that and really explain, they're part of the journey, they understand the playground, they're more empowered to actually act upon the ranges, right, the playground, but also are much more accountable to understand that you want as one unit to reach the financial goals. It's not just finance role to make sure we hit the budget. It's the entire leadership team and entire organization leaders that are responsible for it. And once you share the data, I've learned that it's create much more accountability and understanding the full picture and where the company is heading. So I think that's a critical point for finance. How can they utilize and add value to the organization?
Yeah, I think that's a very important addition, right? It's not just about having the KPIs, controlling the data, and driving the decisions at the top level, but it's also about the accountability, to your point. And the finance team is the owner of the budget, but is not the driver of the budget on a day-to-day basis. So to your point,
Exactly.
the communication and using the data as a leverage and as a means to get everyone behind the same goal. I think communication is a critical aspect. Roy, how are you thinking about it? Do you agree? Maybe also from the point of view as from a public company that had a huge finance team and even bigger organization behind it. How did you do it?
It's a great question, and back in Checkpoint, it's not only it's true, it's a key, and I'll explain what I mean by key. In Checkpoint, no matter how senior you were, coming into the CEO office, when you had to make sure that the decision is being made, a decision could not be made without having data in the room. And the data, and that's the second thing, and that's part of the communication and how you set it up. The data was only provided but by one objective department. Because otherwise, and I've been to discussions where two people came into the room with different data sets. I'll just give you an example. Talking about retention or about attrition, if you will. Someone says the attrition is 10%, it's good, or 5% is good, and the other said it's 20%, it's not good. How can it be that two people coming with the same data set and having different positions? Because one of them divided the number of people who left by the number at the beginning of the year, and the other divided the number by the people who are at the department at this point. Two different numbers, two different realities. And I'm not going to talk about other different realities that we are in right now in our life. But basically, why is it so important? It's so important to have someone that you have that have no interests in the game. The only interest is the interest of the company. They sit in the room, they have one data set, and it doesn't matter if you agree or disagree with what they are saying, the discussion will be about the problem and not about the data. That's how I combine the need of KPI with communication that was truly brought up by Hanan, and that's how I saw, and I have to give a big respect to, back in the days, to Gil and Tal and other people who worked for Checkpoint, because that was, no matter how senior was the person, they told them, without business analysis in the room, there is no discussion. And that was a very, very strong thing. And I think I'm talking about the participants of this webinars, your CEOs have to back you up. And if they will do that, I think the company will have a lot more discussion about the essence and a lot less discussions about fighting over which data is right and which data is wrong.
Yeah, that's super interesting. Yeah, moving onto some of the questions. Let's start. Maybe there's a pretty practical question here too. Where should finance teams start with the automation, and how can they measure the ROI on that? Hanan, maybe you, as you evaluate some tools, how are you thinking about the ROI?
Yeah. So where to start? I think first of all, you need to identify, what really, again, what's the big constraint for your company? Because maybe you're growing fast, but you're not profitable. You want to focus more on how to become profitable. You need to analyze it more. Or maybe it's vice versa. You're very profitable, but you need to grow your top line. So you need to invest more in customer facing, systems and so on. But overall, I would say I like to look at the, eventually sort of what's the outcome, right? And how do you back to it? And most of the time, if you want to get visibility into, let's say, P&L per product, right? Not just your P&L, but really dive into the detail, understand what each product line is doing. Because for mature companies, sometimes you have 5, 10, 15 products, right? It can be a completely different picture when you look at the full P&L and when you actually dive down into each product. Maybe some product it's end of life, you're spending too much on it. And so you really need to understand what's your issues and what level of granularity you want to get to. But I would say, from that, you need to identify the flow. Usually it starts with the opportunity that comes. So, do you have a good CRM in place that you can really identify, and does it flow? So I think the flow of information is critical, because if you have one, good CRM connecting to ERP, that you have a cash solution that covers most of your top line area, your financials, and your cash situation, your working capital. So I think three of them is critical. On top of that, you can add other tools such as AP, AR solutions, and so on. But I would start with the basics and just make sure also you have good connectivity, because again, experience, we were like, it's very hard managing it when you have 10 systems and each one of them every month you need to upload manually, like, you know, the list of employees you have. So it's not just implementing the tool, it's making sure everything is connected, and just think about what's most critical for your company. But I think those three areas are usually the ones that I identify as the key ones, and you can add on top of it.
Interesting. Roy, any thoughts on ROI and prioritizations of tools?
Actually, I love it when Hanan and I, sometimes he's like high level and I'm in the details, and sometimes it go the other way around. So here's where I'm saying something more general. I think 2025 will be a year of huge learning from the financial departments. AI is changing everything, and I would urge the people on this call to learn, to be open. Otherwise, you may stay behind. So I can fully vote for the proposition that Hanan laid out, but it's also very relevant to each one of the companies. You may tailor it differently, depends on your needs. But one thing is for sure, you have to start, working with that beast. It will start from, the low level of just, looking how this is working, verifying the numbers a few times until you have confidence and until there are less mistakes. But just for an instance, last week, ChatGPT introduced the first available agent to be used by people, like regular people that are not working in Google or in ChatGPT specifically. And like, for instance, you can tell this agent, please send me a weekly digest of all the new AI innovations related to finance. And they will, look at everything happening in the world. They will summarize it. You can even define the length of this digest or this email, and you get it on a weekly basis. So these are the kind of things that I think people have to start doing and be familiar with, because otherwise we will stay behind.
I love that. Use AI to learn and adopt AI.
You got it.
Great. So we're nearing the end. So maybe just to summarize, I think one key theme that comes out of this conversation is the CFO and the finance team as a strategic role more than ever, right? Turning from the gatekeepers of the cash and the accountants into really drivers of strategic decisions. And I think that was kind of woven to the discussion in different areas, and the need to be efficient, and Hanan, to your point, to balance growth and profitability, and how AI can play a role in that aspect in the global uncertainty that we're at. I think that's kind of a good summary. If we think of that and again, the word strategic, any final words on, other than what we already discussed, any advice on how to become more strategic in the organization and be really that function in the organization? Roy, do you want to start?
Yeah, I will give the following tip. I think that one of the things that prevents us as finance people to become more strategic is when we're doing a very good CFO role or VP finance or whatever we do. Because when we do a very good, when we act like in a very good way, we are counting the beans, if you will. And that's very important. We keep everything in place, and the reports are great, and we make sure that the inflow and the outflows are great. But in order to be, to get the A+, you have to give yourself the time to get above the technical level and look 1, 2, 3 years ahead. And one of the ways, by the way, to do that, we're talking about technology in the past 45 minutes, use technology to do some of the technical things that you're doing. Verify it, make sure it works, but always remember, just doing the technical work is great. It will give you a high ranking. But if you want to be strategic, you have to start thinking as a strategic and look ahead be familiarized with the trends, raise up flags when you think that are relevant, and that will what will make you, sitting in the very, very small cohort that are taking the shots.
Great. Actually, I think we're running out of time, but I think that was a great ending and a great summary. So I want to thank you again, Roy and Hanan, for joining, and see you in the next webinar. Have a good rest of your day.
Of course. Thank you,
Thank
Noah.
you.
Bye-bye.
Bye.